We hear ROIC thrown around, but what does it actually tell us that other metrics don't?
ROIC shows how many cents of operating profit a company earns per dollar of all capital invested. It's the purest measure of management's skill at using money wisely.
So if I see a 20% ROIC, what does that mean in plain cash terms?
For every dollar of debt and equity invested, the company generates 20 cents of operating profit yearly. A 5% ROIC gives just 5 cents, huge difference in value creation.
Why not just use return on equity or net income growth? They seem simpler.
ROE can be inflated by borrowing more debt. Net income growth can come from buybacks. ROIC strips out leverage and accounting tricks, showing true operating efficiency.
How do we actually calculate ROIC? Walk me through the formula.
Divide NOPAT, net operating profit after taxes, by invested capital. Invested capital is total debt plus shareholders' equity, minus cash. That's the money actually at work.
What's NOPAT exactly? Is it just net income with a different label?
NOPAT is operating profit minus taxes, ignoring interest costs. It shows profit from core business before financing decisions, so you compare companies fairly regardless of debt.
You mentioned comparing ROIC to WACC. Why is that the key test?
WACC is the cost of all capital raised. If ROIC beats WACC, management creates value. If ROIC falls below, they're destroying value, even if net income looks okay.
Can we break ROIC down further? I've heard of DuPont analysis.
Yes, ROIC equals NOPAT margin times capital turnover. Margin is profit per sales dollar. Turnover is sales per invested dollar. Improving either lifts ROIC.
Got a real-world example to make this stick?
Think of a software firm with 30% ROIC versus a grocery chain at 8%. The software firm turns each dollar into 30 cents profit. The grocery chain needs massive capital for stores.
So as a beginner, what's your one practical takeaway from all this?
When screening stocks, compare ROIC to WACC. If ROIC is consistently above 15% and rising, you've found a capital-efficient winner. Avoid companies with ROIC below their cost of capital.
And where can we find ROIC numbers without doing heavy math ourselves?
Many financial sites like Morningstar or StockAnalysis.com list ROIC directly. But always check the formula, some include cash differently. Trust your own calculation for final decisions.